Hi, I'm Don Singletary and welcome to the channel. If you're new to the channel, today's video might seem strange to you. I'm going to show you how to lose trades, and we all know this is a risky type trading. You win, if you're good, about 60% of your trades, and you'll lose about 40% of them, and your win rate's never going to get up to 90 or 95%. You'll have streaks of good and bad luck, but overall, if you're good, you'll win about 55 to 60% of your trades. This means it's all the more important to control the losses on the 40% of trades that may not make you any money at all, and in fact lose some. So today I'm going to show you 2 losing trades and talk about some ideas to help you keep your losses to a minimum. The 2 most common mistakes traders make in this type of trading is 1, not letting their good trades mature. You have to back that stop off a little bit, give them room to breathe. But at the same time, you got to avoid the other big mistake, which is when you're down in a trade, you might turn to hope, and hope is not a strategy. So you have to have some way to tell if you get in a trade that you think is going to have or is having a lot of momentum, and all of a sudden that momentum, whether it's up or down, wanes. You need to be able to spot that and get out of a trade right away to avoid letting your losses accumulate to something that you don't want. As I often do, I'm going to use a still frame here to kind of give you the trade setup for the day. You can see we're trading the Micro Emini called the S&P500 Micro Emini. It trades for $5 a point. And the market opens at 9:30. The market heads straight down pretty much in the first 5 minutes, then kind of goes up and down, takes a little dip there, and finally decides that it's going to give us a trend of a down market. You can see that right here. And down on the MACD in the lower pane on this trade, you can see at right between 10 and 10:15, when the market's going down, you see that distance between the red and green lines increasing. They're well below the 0 line, as you can see, and the green line is far below the red line, and it looks as though that downward momentum is growing and will continue. Now that's a pretty classic thing here. Green line below the red line, both below the 0 line. Downward momentum, it seems to be the trend of the day. We're going check, check, check off of our checklist here. So I go ahead and enter this sell, and at about 10:13 in the morning, I sell one S&P 500 Micro Emini at 42.36 and a half. So there you go. We're on the live trade screen right now, and we're trading up at 42.37.50, so we're down $5 right away. My reaction to that? Nothing. That's pretty normal. You know, you can't dictate to the market to just follow your instructions. That's too bad. 42.37.50. We're still holding there for this amount of time. And I don't see anything on this chart to say to me that this trade's going to go bad for me. It all looks pretty good. Downward momentum, well below the 0 line. But the trade starts to tick up and stall just a little bit. But it's only been like a minute or a minute and a half into a trade. We're down $7.50 now, I think. And the black arrow there is 10:13. That's the time we entered the trade. And we're trading at 42.38.50. That's $10 down on the trade. You know, you can't put the brakes on a good outlaid trade like this one. All the MACD indicator and everything. It is worrisome that after 5 or 6 minutes, there's no downward movement, but we're only down $10. So, you know, I'm not ready to pull the plug on it just yet. Now give it a chance to breathe and see what happens here. And this is very, very normal, by the way. You experience things like this all the time. Now what I'm thinking at this point, I'm calculating how much I would lose on this trade if it goes up to 42.40. It's 42.39 and a half. I'm sorry, 42.38 and a half right now. So I'm only down $10. So going up to 42.40 would be 3.5 points, and that would be $17.50 at $5 a point. I could take that. So if this thing, I'm prepared to tolerate it up to about 42.40 at this particular point in time. But I'm also thinking this trade should start to show me something by now. So I'm watching it extremely closely. And that's what's going through my mind at this particular point. Okay, the darn thing just hit 42.39. And I haven't put in a stop yet. I have a mental stop that I don't want to follow this thing up past 42.40. That would be risking too much for a trade that isn't showing me that it has much muscle yet. And it just keeps kind of floating around between 42.39 and where I entered at 42.36 down there. I suppose I should say that I'm not worried about the thing going wild past 42.40 because the volatility, as you can see, the price is going nowhere. There's just about not much volatility at all, you know, $5 or $10 in there, that's all. So I'm not in a panic to put in a hard stop up there at 42.40. But the thought has crossed my mind. Now, if you're a trader that's just beginning, it might be a good idea to put in that hard stop up there at 42.40 if that's the decision you've made, because you may not be fast enough at the controls yet. I've been doing this a long time, and I know in about a half a second I can be out of this trade and hit the button really fast. So nothing wrong with putting that stop up there at 42.40. For a beginning trader, it might even be advisable that you do that. Put a stop market up there at 42.40. That way, if it hits the 42.40, the very next trade price is yours and you're out of the trade. No worries, and you lost $10 or $15, and it's not a big deal, and you've contained your losses. Now, even when you have losses and you don't let them run and you do get out, say at 42.40 with this one, I'd call that a successful trade, because you got to buy a ticket to get on the bus. We have to take some risk to get into any trade. And this one hasn't shown us it's going to make any money, but it's also not running rampant and losing us a lot of money. But we have to pay very close attention, because these things can turn on you in just a second. It's 10:19 now. We're 6 minutes into this trade, and it's shown us absolutely nothing. We're even money. Now, what I'm going to do now, I don't want to confuse you. I'm going to jump up in time right now. Okay, the new time now is 10:22. We're 9 minutes into the trade. It's shown me nothing in my mind. This trade is on serious probation. I'm wondering why I've already worn out my welcome and probably should have exited the trade already. And so I'm not liking the position I'm in, but I'm not down a lot of money, so I'm not in a panic. I don't have an adrenaline rush, so I've got to hang in here. Now, look down at the MACD, and you'll see the green and red lines look like they might be coming back together. See that blue arrow? It's pointing kind of up from, it was horizontal to down before. And it's just time to pull the plug on this trade. I think it's done, and I want to get out before I lose any serious money. Okay, it's 10:25. Here's how I end the trade. See the yellow band up there just above the blue line? That's my 13 minutes I spent in this trade. It's over. It's time. Look at the MACD in the bottom. The lines are almost parallel there as they're going forward. They're certainly not diverging, and probably are converging. So I enter my order, and I'm out of the trade. Okay, so I had a losing trade. I'm not upset. I didn't lose a lot of money. I have an understanding that I'm probably going to lose 40% of my trades if I live to be 140. That's just the odds on this kind of trading. You'll have those streaks, like I mentioned before, of good and bad luck, but on the average, you'll win 55 to 60% and lose around 40% on the trades. So you need to learn to have not put yourself in an adrenaline situation where you're running away losing money. That's a huge mistake. It's much, much better to go ahead and get out of a trade, and then you'll see 5 minutes later you should have stayed in. That's okay. That's going to happen to you. It's part of the gig, and you're just not going to be able to make a perfect decision until you're out of the trade and look back with the genius of hindsight, and then it says, oh, wow, that should have been easy for you. Well, it's just not true, and you know that if you have any experience trading. So 13 minutes, I lost $10. I lost 13 minutes, really. It hurts more than the $10. But try to keep those losses down to a minimum. I have one more trade coming up I'm going to show you today that's also a losing trade, and it's not all that dissimilar from this one. Stand by. If you'd like to get off to a fast and easy start to learn to trade futures, my introduction to day trading the micro futures has been read by thousands. It has everything you need all in one place, and that saves you time with this valuable information. Thank you. The book only cost about the price of a medium pizza, and my hope is that you would make that money back very quickly, because the book's chock full of good information and a special chapter on trade psychology. Look for the book link below this video. Say, help me out, hit the like button if you want to see more videos like this one. That's how I tell what to make the next videos about, so you're really helping us both out. I'd appreciate that, and thank you. Now, time for the second trade today, coming up right now. Okay, this time, this losing trade I'm going to show you now was the next day, June 15th at, let's see, what time was it? 9:40 in the morning, about 10 minutes after the market opened Eastern time, 9:30. Now, you know, if you watch my videos, I rarely trade at the opening at exactly 9:30 because it's high volatility. A lot of people are adjusting from overnight orders and things like that. So anyway, I'm 10 minutes. This is right on the edge of my own personal rule that I don't trade at 9:30. This one was at 9:40. And because you can see down the MACD pane on the bottom, the green line well below the red line, and fast, it took off in the market. And I look, you don't see it on the screen right now, but all four of the Micro Eminis were down at the same time that I entered this trade. And I shorted one S&P 500 contract, Micro Emini, of course, $5 a point. I shorted it at 42.40 and a quarter. And so that's where this trade started. Now remember, one of the main goals of this channel is to show you how to trade small. These are small trades, a chance for you to learn without putting your account money, big money, at risk. Used to be $50 a point, now trading at $5 a point. Almost makes it seem easy, and you avoid those adrenaline rushes when you go up or down $100 in 10 seconds one way or the other, and that's pretty unpredictable stuff, and you need to wait till you have a lot of experience before you scale up to that kind of trading. So what we're doing here on the channel is teaching people how to day trade by using these micro 1/10 size futures, equity index futures, the S&P 500 in this case. And of course, when you choose a trade, what you're really looking for, you're not going to battle. It's more like you have a puzzle to solve than it is going to battle. And the market's going to call the shots. You just got to learn to pay attention and read what's happening. Now, by selling a contract at a time when all four of the micros are down, the green line's below the red line, and they're both below the zero line, and the opening market is setting a trend that looks down so far. Whenever you go into a short trade with all those conditions, it's less risky than trying to guess when the market might change direction or things like that. But having said all that, remember, you're going to lose 40% of your trades over time, no matter how good you are. So it's a matter of solving that problem, finding a place to trade where the risk is lower than it would be if you didn't find the right circumstances to be able to make a trade here. So let me be clear, put that a different way. Your job is to find a low risk place to enter the market, not to try and guess so much what the market's going to do next, but find a lower risk thing. I hit the positions tab and pull my bracket order over. You see it has 3 parts there. The stop loss at the top is where I am now, and I'm going to put a tentative stop in here at 42.44, and that would give me a loss of $18.75. So if I hit this order, it's not really a live order yet. You see that review and send box, the orange box down on the bottom. Until I click that, the order is not entered. Everything I do up until that time, as I'm doing now down at the close at a profit box, is just having the Tastyworks program compute it when I put the numbers in there. And I see at 4,200, I would make a $201 profit. So if I hit review and send on this thing, I'm going to have a maximum loss of $18.75. And I just kind of put it aside for a moment because I want to watch this trade. 43.50, that's about $15 of loss in the trade. I'm getting pretty close to my mental stop at the moment of 42.44, and I'm just trading right up there with it. And I don't feel in this trade, I can see down on the bottom there my MACD, the green line is no longer headed almost straight down. It's coming to a horizontal tinge to it, and that makes me feel like I've got to be real careful because the momentum on this trade, there is no doubt at all, the momentum is waning at this moment, and I'm down about $15 in the trade at 42.43 and a quarter up there. So I'll just wait for a second and see what happens here, and just about ready to call this one and not take a risk on losing a great deal of money here. And then just a moment or two later, the price starts coming back down again. It's back down. It was near 42.44, and it came all the way back down to 42.40.50. That's even money. Well, quarter of a point. That's even money, and so now I'm going to stay here for another minute or so and see what happens. Maybe after 4 candlesticks and 20 minutes almost, the thing will go down and make me some money. We'll see about that. Sometimes they do, sometimes they don't. Even the MACD is looking encouraging at the moment. It looks like the lines are diverging again. But these things come and go during a trade, as you are finding out today. It's just part of the gig. The idea is to keep the risk as low as possible. Don't risk any more money than you're willing to lose on a trade. And hold that thing on a tight stop so you don't give your money away while you're learning to trade. Keep the losses very manageable. And never, ever substitute hope for a trading strategy, because it isn't. And I'm using the Tastyworks click and drag mouse here, and I decide I'll give this thing one more chance. I'll move it up to 42.50 and see what happens here. It's trading 42.40.75 now. 42.41, and it's been 15, 16 minutes, and nothing good has happened in this trade. About the best I'm going to be able to do here. Right there, I got stopped out. You know, these kinds of practice trading, and even if you're using real money and keeping the risk low, like these 2 trades I showed you today, it can be done. It can be done, and the more you practice, the better you get. And you're really going to have to practice a lot to be able to learn to do this. Most people, it's really risky trading and sometimes hard to learn for people. Everybody's a little different, you know. I wish you well with it, but always be obsessed with keeping the risk low and forget about making the money. If you can keep the risk low, the money will usually take care of itself. I wish I could guarantee that, but you know, I can't, and neither can anybody else. So I hope you've enjoyed the video today. I'm Don Singletary. Be sure and subscribe to the channel before you go. And if you're a new viewer today, welcome, and we look forward to making many more videos for you. I'm Don Singletary. I hope every day is a payday for you, and thank you.